Good afternoon and welcome everyone to the third and final webinar to share an overview of Project Q, the winning proposal in the CDFI Fund Innovation Challenge. I'm Tammy Halevi from AEO, where I lead our new initiatives. I've had the good fortune of being part of the Project Q team along with Keith Catanzano, Lily Huang, and Jason Rosado. I will be moderating the webinar this afternoon. I'm excited that you all have joined us, and I'm especially excited to introduce our guests. We have assembled a terrific group to share with you more about the Innovation Challenge, the solution our team has built, and the expectation of bank referral partners and CDFI users. Joining us this afternoon are Annie Donovan, Director of the CDFI Fund, the sponsor of the project. Throughout this process, Annie and her team have brought clear vision and leadership and strong thought partnership to our work. Welcome, Annie. In the first two webinars about this project, we shared with you the process that our team has used to guide the design of the solution and the technology architecture that we've built to support and scale it. In this call, we will focus on user expectations. To do that, I'm very pleased to introduce and welcome Doug Schaefer, Executive Vice President for CRA at Woodforest National Bank, and Nancy Stark, Senior Manager in the Community Affairs Group at Capital One. Many of you on the phone know Doug and Nancy, and if you don't, you really should. Doug is the thoughtful and committed leader of Woodforest CRA function, where he works hand in glove with the bank's executive team to implement the bank's commitment to the communities in which they work. Under Doug's leadership, Woodforest is committed to be the first bank partner for the solution, and we are just thrilled to be working with Doug and his colleagues at Woodforest. Nancy Stark manages small business-focused community partnerships for Capital One. She is also a member of AEO's Board of Directors. Nancy's tireless commitment to AEO and other organizations in the space, along with the work that the CDFIs and other community organizations in Capital One's portfolio, is invaluable and really appreciated. Throughout the Project Q design process, Nancy and her colleagues have shared insightful and practical feedback to help our team ensure that what we build meets the needs of banks. So welcome, Doug and Nancy. You'll also hear from Keith Catanzano, who serves as the technology lead on the Project Q core team. He'll take you through the user experience for both referrers and receivers. Lastly, but definitely not least, welcome Selena Pena, Chief Program Officer from LiftFund. Selena has been actively involved in the project from the start as one of the 4 CDFIs that agreed to be in the earliest adopter cohort. She'll tell you more about LiftFund and their expectations from Project Q in just a bit. Welcome, everyone. In today's call, you'll first hear from Director Donovan about the rationale for the CDFI Fund Innovation Challenge. Then you'll hear about Project Q. We'll share a bit about the problem we're trying to solve and what we've built to do that. We'll give you a preview of the user experience, and then you'll hear from Woodforest, from Capital One, and from LiftFund about how they think about Project Q. Of course, we'll share with you the next steps for your organization to get involved, and we'll close with a period of questions and answers. 2 pieces of housekeeping. First, we are recording this webinar, and we'll make it available to all participants after the call. And second, if you have any questions during the course of the conversation, please type them into the chat box in the lower right of your screen, and we'll do the best to answer questions at the end of the session. So now, without any further delay, I'm delighted to welcome Director of the CDFI Fund, Annie Donovan. Annie?
Thank you, Tammy. Thank you for having us here for this third and final webinar on Project Q. Just by way of background, the CDFI Fund experimented a year ago now with an innovation challenge, and the purpose behind it was to seek new ways to create access to capital in underserved markets, and in particular markets that are not yet being served or could be better served by CDFIs. And so AEO wrote the winning application with the solution proposed, Project Q. And I think there are several things about this solution that made it very competitive. One is certainly the market in terms of underserved small businesses and underserved entrepreneurs is an area of great need. And we were also very enamored by the solution to build shared infrastructure to address the problem. So the other thing that really excited us about the initiative was the potential to facilitate a larger role for regulated institutions and other kinds of investors in aiding underserved small business borrowers. So for many banks, participation in Project Q will not be just about CRA obligations, but will also be driven by a genuine desire to help their community. And as we know through practice, that often markets that start off being CRA markets turn into just simply good business. So we're hopeful that this technology will not only increase the overall level of technological competency within the CDFI industry, but can also help establish stronger partnerships between banks and CDFIs in those same communities. As we approach the end of our contract with AEO to develop the Project Q platform and the end of the CDFI Fund's direct involvement, we want to thank AEO for their leadership in this project, as well as their many partners, including CDFIs, banks, and technology experts. So we're very pleased with the progress that has been made and can't wait to see this be put into action. So with that, Tammy, I'll turn it back over to you.
Thanks, Annie, and we really can't express enough how great it has been to work with you all and your team at the fund. We're excited about the opportunities for transformation of small business lending that you described, both bringing regulated institutions to the table and really improving the flow of capital to underserved entrepreneurs. So before taking you all through the Innovation Challenge solution, just a little bit of context about AEO. We're the National Trade Association for Microfinance and Microbusiness in the United States. We're celebrating our 25th anniversary year. AEO works with our members and partners to create economic opportunity for underserved entrepreneurs. Our members provide capital and services, what we think of as trusted guidance, to business owners and aspiring entrepreneurs so that they can start and grow and hire. So what is the problem that the Project Q solution intends to solve? Our team set out to address a complex, urgent problem, and one that we believe won't be solved absent intervention, without innovation. Treasury Secretary Liu named the problem. Every business day, 8,000 applications for credit from small businesses are declined. We estimate that that represents a credit gap of between $44 and $52 billion. At the same time, CDFIs are only serving a small fraction of the 2.2 million small businesses that are located in low-wealth communities that are seeking capital in a given year. And so we asked ourselves, how can we radically improve the path to capital for those business owners that are difficult to serve, while at the same time improving the strength of CDFI small business lenders? And so with the problems identified, we assembled a great core team and extended teams to engage in what has been a year-long problem-solving effort. Our core team includes Keith Catanzano and Lily Huang and Jason Rosado and me. Together, this group represents a real mix of training and professional experience, including deep expertise in technology development, product development, and community development finance. In addition to the core team, we recruited 4 CDFIs to serve as early adopters. ACE in Georgia, Intersect Fund in New Jersey, Justine Peterson in Missouri, and LiftFund headquartered out of Texas. We selected these 4 CDFIs because all of them are high-performing and distinctive in some ways. And as importantly, they represent the breadth and depth of CDFI small business lenders on several dimensions. That includes their product mix, their target markets, their geographic scope, and the way that they currently rely on technology. You'll hear directly from Selena, who's been part of the team, in just a bit. Our vision for the Project Q solution is to create a marketplace of referrals. We expect to create value for each of the 3 stakeholder groups that must participate in and, frankly, benefit from the marketplace for it to succeed. Those are referral partners, community lenders, and, of course, small business owners. For banks and for non-bank lenders, we're creating a scalable referral program that enables them to efficiently and effectively connect the most difficult-to-serve applicants to CDFIs while still retaining their customer relationships and being able to track outcomes for an individual client and their portfolio of referrals. For CDFIs, this marketplace is a source of qualified lead generation. And most importantly, we're building the marketplace to connect small business owners to capital and to services to help them grow and to hire. At this point, I'm delighted to hand it off to Keith Catanzano from the Project Q core team to take us through the user experience for business owners, CDFIs, and referral partners. Keith, over to you.
Thanks, Tammy. And thanks for everyone who's joined our conversation this afternoon. As you heard a little earlier from Director Donovan, what we have focused on as part of this innovation challenge is creating a set of shared infrastructure that will help to foster and strengthen partnerships between the key stakeholders in solving this credit gap that Tammy just described, creating partnerships between banks, between CDFIs, and fundamentally serving the small business clients in need of capital. So what I'd like to do over the next few minutes is take a virtual test drive of the Project Q system. And I will start from the perspective of that small business owner. As a small business owner, I've applied for a loan with my mainstream lender, my traditional bank or non-bank lender, and unfortunately, I was not a fit with any of the products that they offer. At that point, I received a referral from my bank or from the non-bank lender where I started, and the referral was to the My Way to Credit program. In the background, what happened was that my bank had shared a little bit of data about my business, about my application with the Project Q system, so that system could do some preliminary matching with the CDFI profiles that were already part of the overall infrastructure. And so by the time I, as a business owner, get the referral from my bank to the system, we've already done a bit of a look to see that this is a candidate who fits the various CDFIs that are participating in the program. So as a business owner, I go to the My Way to Credit website. Screenshot is showing up now, and enter in the referral ID. As you can see, the layout is fairly straightforward. One large call to action in the center, which is to enter that referral ID that I got from my bank to kick things off. A little bit of information at the top to learn more about the program or how it works. At that stage, I click Next, move forward to now get a bit of a lightweight assessment or feedback based on some of the preliminary information that the My Way to Credit system knows. Something to give me a bit of context of how lenders look at the applicants, and to provide a bit of context on how this group of CDFIs will look at the application or look at my need for credit. At that stage, I'm motivated to continue to go forward. I feel comfortable that this is a program that gets me, and begin to fill out just a little bit more information so that the preliminary match, which was done before I came to the website, can be updated. And at the end, I get a message identifying, congratulations, you're now on your way to credit. At the bottom of the screen, if I were to scroll down, I would see the organizations, the CDFIs, with which I was matched. I would find contact information and a bit of a description about each of the organizations so that I can take the initiative, if I choose, to reach out either by phone or by email. Included in the description of the organization is not only the contact information, but also a point of contact so I can reach out to a real person. Now, in the background, what happened for those CDFIs who are participating in the Project Q program? They had already created a profile. That is, they had already described the type of applicants that they serve well. And when that business owner completed the online form that we just looked at, his or her information went into the system, and the CDFI received a real-time alert notifying them that somebody was matched to one of the profiles for the products that they offer. So now we've created a communication opportunity between the business owner and the CDFI. The screenshot you're seeing now is a screenshot of the test system. So none of the data that you're going to see, none of the campaigns, none of the profiles are based on either real customer data or anything from a particular CDFI. But it does show you what the interface would look like for a CDFI user. In the top corner, you see the My Way to Credit logo, a couple of top-level menu bars around My Customers and some reporting, and then within it, the campaigns, which is the place in which a CDFI can look at the applicants matched to their products. The campaigns created by CDFIs, as shown here on this screen, not just one profile. It can be any number of profiles to characterize the clients that you serve. And as you can see from this summary view, we not only identify how many applicants have been matched to your individual campaigns, but we also begin to track what's the progress through the funnel, if you will, from those who are matched to those initially contacted, and ultimately those who are funded and the average loan amount that they received, so that we can begin to understand where did we have some traction with respect to these campaigns, and how quickly and how are they moving through the process from an initial match to ultimately reaching a decision around funding. And within each of those campaigns, there's a very specific profile that the CDFIs have created. As you can see here on this screenshot, the profiles can be based on a range of attributes, whether it's the location of the business, the credit box of the business, the industry, a number of other characteristics that allow us in doing the match with the referral partner to be comfortable that there's a high likelihood of a good fit here. And at this point, I'd like to pause and hand the microphone, so to speak, over to Selena Pena from LiftFund to now talk about, from the CDFI perspective, what are her expectations and what are some of the things that she's looking forward to getting out of this system. Selena?
Hi guys, how's everyone doing? Thanks so much for being on the call today. Keith, thanks for the walkthrough. I want to take a moment to thank AEO and CDFI for allowing us to be part of this movement, if you will, to create a pathway for folks, not only from our lens, but also from a bank's lens in connecting entrepreneurs to capital. LiftFund is a nonprofit community-based lender, like many of you on the call. We're based out of Texas, and we were founded in 1994. I think one of the things that excites us about this way of connecting digitally to clients and to our amazing bank partners is that there's a seamless approach, as Keith walked us through, in terms of being able first to see who is seeking capital and seeing their needs, as well as assessing if it is a feasible deal that an organization like LiftFund can participate in. When we think about reaching our clients, one of our biggest referral partners are banks. And so how do we strengthen that relationship? As many of us know on this call, technology serves as that digital handshake from a bank to a CDFI, and sometimes a client seeking after not being able to access the capital they need. And so when we think of Project Q and think of how we see the pie of opportunity in serving communities who are needing capital, specifically minority, women-owned businesses and veteran-owned businesses, we feel that this tool can serve as a really great solution in the already pretty diverse mix of referral opportunities of LiftFund. So those CDFIs that are on this call, and even for the bankers on the call, we've partnered with many banks and CDFIs in terms of making a deal happen. I think it's important to know that Project Q just adds to the strength of that as well. Thank you.
Great, thanks, Selena. And I think that's a really important perspective to think of. You know, there is with everybody on the call, there is a set of partnerships that exist, and fundamentally what we're trying to do with this shared infrastructure of Project Q is, you know, to strengthen that and to find some ways to use technology for what it's good at, but ultimately to improve upon and strengthen some of the partnerships and create new partnerships between banks and CDFIs so that collectively we're supporting the communities and the businesses within them. I took a couple of minutes earlier to walk through what is the system and what is the experience for that small business owner, and then for a CDFI perspective. Let me now take a few minutes and walk through a similar view of the system from a referral partner's perspective. So as noted earlier, CDFI had created a set of campaigns or profiles for borrowers and clients that they serve well. That small business owner, after being referred over by her bank, filled out a little bit more information and was matched based on those profiles and based on the information she shared. The referral partners have an ability to not only share data into the system, but to also use the system as a way of tracking and understanding the flow of those customers through the different CDFI matches that were created. And so the screenshot shown here, again, just from our test system, a mock-up, shows a set of campaigns and notional CDFI organizations that have created them, and the number of matches and the flow of those matches through initial contact and application completed, and ultimately to a funding decision from beginning to end. The referral partners have the opportunity to subscribe or unsubscribe from any of these campaigns. So if there are banks out there or other referral partners out there who have a set of partners that they would prefer to initially work with, you have the ability to do that kind of filtering, but also you have the ability to see the performance of some of those other CDFIs that you may not know of, and get to know what they could offer your small business customers as well. And then, much like with a CDFI, you can dive a little bit deeper into the summary of a campaign and see for your particular customers how some of those particular opportunities or deal flow, as Selena mentioned, are progressing, and get a sense of how well your small business customers that you referred into the program are reaching their capital needs. And so with that as sort of just a quick snapshot of some of the technology to support these partnerships, I'd like to shift gears and introduce Doug Schaefer from Woodforest National Bank to share some of his perspectives on their expectations and insights for this program.
Thank you, Keith, and thank you, Director Donovan and Tammy Halevi and Connie Evans. Really great to be here, and I'm actually in person with Tammy and the team here in DC having this call, so it's really did that because of the energy that I always get from this group. And Woodforest is really proud and thrilled, I'll use Tammy's word, to be a partner in this innovative endeavor to create more opportunities for small businesses to access capital. For those not familiar with Woodforest, we're a community bank with a very large footprint. And we grew out of what started as a traditional banking model in Texas, but we discovered the value of the in-store banking and the call that folks want to still have to engage with their bank when and where they would like to. So with a great relationship with Walmart, we're in over 500 stores and across 17 states with a varied and great need. We know that when it comes to customers, we are really engaged in what their needs are. What impresses me most about Woodforest bankers is they will spend the time to get to know their customers before their customers. And I've seen them spend 45 minutes with a customer just to open a checking account, to explain the options. So it's very synchronistic in trying to get the un- and underbanked into the system, matched by products such as second chance checking, being open 24 hours a day in some locations. We're open whenever our stores, Walmarts and others, are open. So really excited about the opportunity here to take this and, consistent with our goals of being minded with the community, advance this cause that Project Q is here. So a little bit more about our community. Woodforest, with a lot of, I'll call them primarily millennial bankers, are very engaged in the community. And wherever you go, and there's a picture of one of our divisional leaders up there with an automatic nail gun. So you can see this is just the spirit of who we are. There's a lot we give to our community. We worry about and engage with them on financial wellness. We do nearly 15,000 a year in services in that regards. And we've got a great partner, Family Promise, who we deliver a lot of those needs through. So as we look to this, one of the things that our leadership team realizes and we're committed to is the value of small businesses in Main Street America. And we see that micro and small businesses really, there's enhancements that could be made to the ecosystem, visibility that can be brought both from a human capital as well as a dollar capital. And we're committed to try to help reduce some of that fragmentation and be a valuable partner with these businesses that come through. We see a lot of value in this pilot. We've worked with AEO and Project Q and the CDFI Fund as the first and only bank through the pilot. We're excited to see what comes next, and we look forward to seeing you guys in our branches and making better relationships as we go forward. Keith, I'm handing it back to you.
Thanks, Doug.
It's
either way, it has been truly a delight working with you and your fantastic team and colleagues. We too are excited to continue forward on this journey of transforming the business owner experience and the experience for CDFIs. Let me now hand it over to Nancy Stark from Capital One to share with us her perspectives on solutions to refer bank customers to CDFIs. Nancy?
Hi, welcome everyone. Thanks for the opportunity, Tammy. So just a little introduction about Capital One. We are the 8th largest bank in the United States, headquartered in McLean, Virginia, which is in the DC metro area. Our footprint is primarily in the states of New York, Louisiana, Texas, Maryland, Virginia, New Jersey, and DC. However, since our acquisition of ING Direct in 2012, we we are really kind of everywhere. Those of you who might have been ING Direct customers in the past, that's a national direct online bank. When it merged in with Capital One, it became Capital One 360. So we really do have a full range of products and services by having the acquisition of ING Direct to Capital One. So we offer a broad spectrum of financial products and services to consumers, to small businesses, and also to larger commercial clients through a variety of channels. And an example of what's happening with Capital One and across the financial services industry is that we are incorporating more digital access and digital products, and we are also looking at what this means for our consumers. So recently we are piloting something called Ready, Set, Bank, which is a program that will help seniors to learn how to do online banking and teach them security, how to deal with the security issues so they feel comfortable entering into that technology age of banking. So that's just a range of the sort of things that we do. We support businesses across the spectrum in every stage to help them to succeed and grow. And that's starting with those that have a business idea to the startup to helping existing businesses to grow further, which is often the biggest challenge. So in the community and national partnership space, we do a lot of work partnering with CDFIs to partner with CDFIs so that they can provide trusted guidance, technical assistance, but we use that word at AEO, trusted guidance, and credit to businesses that are not yet bankable. And I'm sure this is familiar to everyone. There's so many folks out there that for a variety of reasons are not able to get financing from a financial institution, but hopefully they can get it from a CDFI. We also are very active in engaging our business bankers in assisting our nonprofit partners with classes and workshops, business pitch competitions, et cetera, et cetera, et cetera. So we are extremely involved on the local level. And on the national level, we also partner with groups like KISA, Grameen America, to help small business organizations, small business owners, that do not have a well-established credit history to receive loans. Our lending to CDFIs ranges from $100,000 to $1.5 million. Notable, given this call, is our loans to LiftFund, and working closely with that organization, Axion, Grameen America, and we also provide grant support to the Trade Association for CDFIs, which is the Opportunity Finance Network. And then on the more core business, line of business side of Capital One, like most financial institutions, we provide loans and working lines of credit, working capital. As such, we have an array of SBA products, and we also have an entire suite called Spark Business, which is especially helpful for smaller businesses, and we have a suite of products there. Spark Pay, which is like Square that you can put on your phone, makes it easy for small businesses to operate using just an iPad. So there's a whole bunch of exciting stuff going on there that I won't get into too much detail. So going on to the next slide, please. Thank you. So why are we at Capital One interested and enthusiastic about what Project Q is about? Well, first I want to say as an AEO board member that we just really applaud AEO for being out there, thinking out of the box, putting forward an idea and testing it out, realizing that parts may work, parts may not work, tweaking that. So we just really applaud AEO for its innovative thinking, and also applaud the CDFI Fund for seeing the benefit of such an approach. And we are interested in this subject broadly because, like other mainstream financial institutions, as I've said, we provide investments or loans to CDFIs so that they can get below market patient capital to relend. But we recognize that there are a lot of CDFIs that are seeing a need in the community that they cannot fill. They just do not have enough funding through these loans from banks and such to relend to small businesses that are in need. And the need is great, so that on average, and these are statistics from CDFI Fund or from OFN, 75% of the CDFI clients are low income, around 52% are minority, 48% are female. And that helps to define the need. The industry has about 900 CDFI groups across the country, and they do have $90 billion. But as I've said, it's not quite as much as they need to operate. The other thing that we see and why we applaud AEO for thinking out of the box is that many CDFIs are, in addition to being undercapitalized, they are overwhelmed and they're reliant on manual processes. So that, we see, well, we support CDFIs, and on a local level here in the DC area, work very closely with the CDFIs in the Mid-Atlantic. We see that many of them are still taking paper applications, are relying on a non-digital solutions, and that slows down the entire process. And furthermore, there is no system right now for efficiently matching small businesses that need credit with nonprofit lenders that provide credit, and specifically for identifying the kind of need that the small business has and the kind of business that it is, what sector, the entire profile, and then matching that with a nonprofit lender that can provide that credit, kind of like the Match.com approach. We are also concerned that given that a lot of the CDFIs are struggling in terms of doing this work quickly, and the matching is not occurring as effectively as you would like it to be. Meanwhile, there are a lot of small business owners who are turning to online marketplace lenders because they have a quick, easy access to capital. And our concern there, along with many others in this field, is the cost involved in that and the risk to the small business owner. So when you take all those things together, this is why we strongly believe in the CDFI industry, yet we see a need for other solutions, and credit AEO with coming up with a very interesting idea.
Thank you, Nancy, and really thank you for all of the time, insights, and guidance that you've spent during the course of the project, introducing, sharing your perspectives, introducing us to different functional folks within your organization, so that we are sure that what we've built can meet the needs of a range of banks. So, from the outset of this work, we've continuously asked ourselves and everyone with whom we've engaged a really seemingly simple question, and that's, what needs to be true to solve the problem and meet your needs? And so let me invite Doug and Selena back into the conversation. For each of your organizations, what needs to be true? And why don't we start with you, Doug?
Great, and thanks again, Tammy. So let's see if I can channel our CEO, Kathy Nash, well, and because it's really how we are as a bank. And let me just be clear, this goes well beyond CRA. The reason we're in this is, as we think of it, and as Kathy phrases it continuously with our organization, and it's simply, we have the best lobby in banking. We have the opportunity to reach a lot of businesses. We know all of them will not meet our credit box. So Project Q really excites us because it lets us give them alternatives to get them going, get them to the point where they can be, where we can be a bigger part of their financial future. So the real value to our customers, the ability to give them an opportunity where they may otherwise not have one. And we've had success with working with organizations, and we have a great long-standing organization with Jenny Barreras and LiftFund and Selena that, boy, this just opens up what we've been working on with them directly in the state of Texas and elsewhere. So we're really excited to be here. Thank you, LiftFund, for being a great partner, and thanks to all the CDFIs for the commitment to this. So, Selena, turn it over to you.
Thanks. Thanks, Doug. And thanks, Nancy, as well. You know, going back to Nancy's comments in terms of, you know, innovation and thinking, what I call bought before our time, I think that the platform of Project Q can lead to great potential, and data integrity, data quality, and being able to aggregate it is a super important element of the work that we do as CDFIs. We have many customers as CDFIs and many partners, banks from a perspective of sharing information on our impact, the CDFI fund from reporting, but also to serving our clients. And the CRM integration elements and the data integration that the platform provides is very simple and manageable and approachable. So if you're dabbing your toe in technology, this is a place to dab a little bit more so that you build your impact with some really great partners. The second, just in terms, as I mentioned earlier, that pie and the approach of where do our customers come from. As we all know as CDFIs, banks at all levels serve as a really great ambassador for the CDFIs in each community. And being able to have that warm lead, which we've done with both Capital One and with Woodforest, whether it's from a banker perspective or even from a center, one of the call centers in terms of referring to a CDFI. I think that's really important to think about, because that becomes not a cold or a digital lead, it becomes a warm digital handshake for that customer. And so I think Project Q solves for a couple of things that we might not think of every day, but in order for us to meet the market demand that Tammy mentioned, this technology solution serves as a really great opportunity to test our ability to serve as a recipient of referrals and to reduce that demand to more yeses. Thank you.
Thanks, Selena. So you'll see that the Project Q system is designed to meet the expectations that Selena described of a technology solution that you can, I like that phrase, dabble your toes into, create a stream of qualified referrals from banks, which are frankly the largest source of customers from any one place. We're able to bring additional value to small business customers that banks can't serve in a manner that makes it easier for CDFIs to serve those leads. And of course, fundamentally, we're doing this in a way that brings transparency to all stakeholders so that more funds can flow more effectively to business owners. That includes the scalable technology where participants will meet performance criteria, and technology will enable both bank referrers and CDFI receivers to report and track inputs and outputs and results in the ways that Keith described earlier. So version 1.0 release of the system is nearly complete, and the first phase of the project officially ends on September 30th. And so by now, if you're asking yourself, this is kind of cool, but what does it mean for my organization? Our plan is that following this proof of concept period with the first cohort of CDFIs, the solution will be made available to a next cohort of CDFIs that we will select before the end of the year. There will be a standard onboarding process that takes CDFIs through the performance expectations for participation in the system and for use of the system. And at the same time, referral partners will have a custom onboarding process. And we invite interested parties, referrers or receivers, to sign up and let us know of your interest by completing the short expression of interest form that's online. The URL appears on the screen in front of you. It's the bit.ly sign up queue. Our team will then follow up with organizations that express interest. So this brings us to the end of the presentation portion. Again, I really want to thank Director Donovan, Doug Schaefer, Nancy Stark, Selena Pena, as well as the entire Project Q team, and frankly, everyone along the way who's contributed to this innovation journey. As Director Donovan said at the beginning of the call, innovation is so critical to increase the flow of investment to businesses and the communities that we all care so much about. We're confident that this proof of concept project is invaluable, and frankly, we're incredibly excited for what's to come next. We're now ready to take questions. I'm going to hand it over to Keith to moderate the Q&A period. You can submit your questions via the chat box in the lower right-hand corner, and we're standing by to engage in dialogue.
Great, Tammy. Let me bring up the first question, which is somewhat operational in nature, and that is, how will the CDFIs be able to access and interact with the borrowers, and will there be an opportunity for the CDFIs to build a direct relationship with these borrowers?
Absolutely. It's a great question. So first of all, applicants are referred, as you know, by referring institutions. So the business owner starts with a relationship with her bank. Business owners opt into the system, and once matched with the right product fit, are connected to the CDFI. How are they connected to the CDFI? In two ways. First, the business owner will be presented with a profile of the matches and given enough information to be able to make some decisions about who do I want to connect with. At the same time, that information is also transferred directly to a loan officer in the matched CDFI, so that the business owner has the option to connect, to proactively connect with the CDFI, and the loan officer in the CDFI has the opportunity to connect directly with the business owner. Once that match is made, the business owner has a new relationship. She has her existing relationship with the bank that referred her, and she has a relationship with the CDFI who she's working with going forward.
Great, thanks, Tammy. Another one that just rolled in is a question, perhaps, Doug, that you could help to begin to address, which is, from a referral partner's perspective, what do you look for in a partnership with CDFIs that may be on the platform?
Great question. I think we're blessed because the partners that are on the platform are either our current partners or we're well on our way to establishing them. Plus, we've got a few more that are queued up to come, pun intended, queued up to come in to the next iteration. So I think it's great to use our present ones as an example of, we just have a collaborative relationship. We've done things jointly together in the communities to create real change. So we're looking for that meaningful impact on Main Street America in the massive number of markets we serve, with 204 CRA assessment areas, and even more than that in terms of communities where our 743 branches are. We are in and of the community. So we just want to make sure we're identifying opportunities to enhance small business. And we see it more as a continuum of need, both on a human capital side in terms of providing the trusted guidance, and also making it clearer the understanding of where capital is and bringing good partners to the table. So we look for this to be just one of the pieces of a long-standing relationship, not only with the CDFIs, but with the community itself.
Great, thank you so much. Next question that has come in is one around the onboarding process. Could you explain a bit more about how you onboard, whether it be a CDFI or a referral partner?
You mean that's to Tammy, not Doug, right? I'm just
Doug, I assumed you were going to Tammy.
So the onboarding process to date has been different than the onboarding process go forward will be. However, it's a fairly streamlined or straightforward process. From the receiver side, there will be a set of a service level agreement and a set of standards to which a receiving organization will commit. These will not be particularly onerous, and you will find that they are very close in line with what you already do as a CDFI. From there, an organization will assign an account owner or a lead on the account and have access to the portal. There's a little bit of training, practically, as to how to engage and operate. And then the CDFI creates, as Keith described earlier, anywhere between 1 and n number of customer profiles, and waits for the flow to begin. On the bank side, the onboarding is different but not materially more difficult. Banks have 2 ways to engage with the system. One is more integrated via an API. The other is using secure file transfer protocol. Once the bank makes some choices about how it wants to send data and push and pull data from the system, that piece happens. The bank then creates the profiles and similarly begins the referrals. Pretty straightforward process with training and support as appropriate on both sides.
Great, thanks, Tammy. I think I have the advantage of moderating the questions to cherry pick the ones that I know I can answer. So one that just came in is, can a CDFI stipulate to only receive referrals in a certain census tract or other geographical area? The yes is the short answer. The longer answer is the CDFIs have the ability to create profiles, and within a profile you can not only define a geographic box or region at the state level, census tract level, county level, or zip code, but you can then layer on top of it other characteristics for businesses or applicants within that particular geographic area. So now to take a harder question and throw it over to somebody else, Tammy, do you expect any of the applicants may be pre-qualified for a loan? That is, the initial matching may indicate that there is a CDFI that can serve that applicant, but ultimately when the business owner fills out additional information, they do not qualify for a loan with any of the CDFIs on the platform. And if so, how would you engage with that applicant?
It's a terrific question. So let me answer it first by sharing our expectations of what the decline profile will look like before sharing sort of the mechanics of what we expect the system will do. So when we look at a universe of declines, the expectation is that about 30% of those applicants are likely creditworthy from products available within CDFIs. We think, based on analysis to date, that there's another probably 25 to 35% of those declines that are what we would call but-fors. But for 1, maybe 2 discrete challenges where a specific intervention could make a difference, those business owners could become creditworthy within a fairly short period of time with a discrete intervention. And then there's another, the balance, 30 to 40% of those applicants that are on a quest for capital, but their real challenges probably lie elsewhere, and if they could fix those other challenges, they would likely be credit ready or wouldn't be credit constrained. And so the expectation is that in the initial phase of Project Q, the matching will be entirely to credit products, but the expectation is that very soon after, we will be able to make matches to the range of support services that we think of as trusted guidance. Support around credit building, both personal and business, support around financial management, mentoring and coaching, support around sales, and guidance around how do I make myself, or more importantly, my business, financing ready. And so we will, as we have to date, evolve and design and build to meet both demand and the needs of applicants in the platform, but the expectation is absolutely that getting folks on the path to capital is as important as getting them capital very quickly.
Great, thank you so much. Doug, I think this next question may be one that you could share some insight into. The question is, how do you believe banking partners or referral partners in the system would think about matching their customers to more than one CDFI that operate in the same geographical area?
What I like about the Project Q solution is it gives actually a nice framework for everyone to have leads that are trying to serve the community. I think one of the things we're going to learn from this is it's rich with data opportunity for us to learn, and with Woodforest in particular, we have such a high volume of applications, but also a high decline rate. Consider our customer set and lead set, if you will. I think we're going to have to do a little bit of a gut check as an industry and say, where are there product gaps? And we certainly, as I talked about earlier, view Project Q as exciting because it's not really it's a win-win for everybody, in the sense that what we decline is either going to be fulfilled with a but-for, or need some trusted guidance. So I view that as a win for everybody, for the community at large. So I think all of us will be fine-tuning our model to understand what can we learn from the demand that's present, that's coming through the system, and how can we be more responsive. What I don't think is something we are concerned about is this perception of competition, in a sense, because I think the demand is far outstripping what we're able to serve currently. So I think it'll be a nice problem to have if we have it, but from our perspective, I think this gives us a marketplace where one doesn't currently exist.
That's a great point, and that's a great perspective. Thank you for sharing that. Tammy, I think we may have time for one or two more questions. Let me throw one your way, which is, what do you envision is the promise to a borrower when they are matched? What is the CDFI responsible for performing for the match and ultimately afterwards with that borrower?
A great question. So the expectations for performance are on two dimensions. One is, frankly, process related. How quickly or in what time frame will the borrower be contacted, and what can the borrower expect from the experience? We anticipate that the match screening criteria will provide sufficient assurances to the CDFI that the applicant is a good fit, but we are careful in the language presented to the borrower and the expectation setting that she's not set up to be frustrated or disappointed. The second part of that question is building on Doug's point about data. The expectation is that in time two things will be true. One is that we will have additional data-generated performance to understand what is the empirical expectation around time to touch and close rates, and at the same time there's an expectation that we'll be able to refine the methodologies for matching, including potentially integrating some elements of actual credit scoring. For now, the expectation is time and experience. Not only will we track what Keith described around business owner match rates and process, we'll also track feedback from business owners or applicants about their experience.
Yeah, and Tammy, if I may add on, I think coming back to my previous answer, I think this puts the customer in a greater focus for an industry that is so fragmented. And so our ability to learn from this through the data, through the use cases that are coming through, gives us an opportunity to put the customer first, put those small business and entrepreneurs first, get a greater visibility as to the needs and how we can creatively work as an ecosystem here to solve it. So excited about it.
Thanks, Doug. We have come to the end of the time of our webinar. A few things. First, please do sign up. Someone did ask the question whether the different tag, in our last call it was QCRM, in this call it's Q sign up. If you signed up before using QCRM, we've got that, it's the same, we just changed the descriptor. The second thing to close with is we note that there were a number of questions that we did not get to. We will share back answers on many of them, or on all of them, because there are some very good questions that folks want answers to. With that, let me again thank all of you for participating and following along at home, and to our panelists, Director Donovan, Doug Schaefer, Nancy Stark, Selena, and the whole Project Q team. Thanks, everyone, and again, we will be distributing the slides and the audio to all of you who have participated. Thanks, and have a great afternoon.